What's up everyone, it's Caddy with Money Investing. Welcome on board for another Market Open live stream here. So hope you all are doing great and are ready for another week here of absolute madness, craziness, drama in the markets. We got a lot to talk about because the Federal Reserve is going to be scheduled for September 21st, which is a Wednesday. If you guys can see me and hear me, just give me a thumbs up. I just want to make sure that the audio and the video is working well. So just let me know in the live chat if you guys can hear me, just see me, just want to make sure that everything is working well here on the audio aspect of it. And let's just quickly do our poll as well for today. So markets today, we're going to do green, red, and flat, and we should be all set and ready to go. So QQQ here down a little bit over 86 basis points. So we are kind of gapping down a little bit. We got the S&P 500 also gapping down over 64 basis points, and the Dow Jones here down about 69 basis points as well. So we are seeing a little bit of a momentum downside here for all three indices. The volatility is up over 4.7%. And of course, Bitcoin and Ethereum and just cryptos in general have been on a very, very significant slide lower, with Bitcoin down over 3%. It actually traded as low as 18,200. But we are seeing some buyers kind of step in to bring us back over 18,800, and Ethereum also now trading just over 1,300. In fact, we literally got validated. This is pretty crazy. So we got validated at this previous resistance that we talked about, and the support level was 1,281, so $1,281.69. The low for today was $1,281.26. So just absolutely wild. Buyers kind of stepping in, although still down 1%, but just pushing higher up to 13.21 at the moment. So that's where we are. And crude oil prices are on yet another decline here. That's what we like to see, down almost 3%, just trading under $83 per barrel. So this right here acting as a very strong resistance for crude oil. And support level is going to stay put all the way down to $81 per barrel. So this right here is going to be that next area of support that we are watching for crude oil. And of course, a breakdown below this, sub $80 would be very nice. And then $76 is going to be that next level to pay attention to. So those are some of the updates here on the volatility, cryptos, and of course, crude oil. And the yields, the 10-year yields are almost at 3.5%. In fact, we did cross over 3.5% on the day. It was up over, it was above that level, but right now we're just coming back down, but still up over 0.5% here on the day so far, with all the yield curves still inverted, with the exception of the 10 versus the 3-month, which is just moving sideways, more or less flat here, but we still have the 2-year, which is the highest at 3.9, almost 4%. And of course, the 10-year yield also pushing higher on the day. So talking a little bit about some updates here. Take-Two Interactive shares are down 5.8% in pre-market after Bloomberg reported that a hacker released gameplay from its upcoming GTA 6. I don't know why they said Grand Theft Auto 4, but GTA 6 game online. And it's said to be one of the biggest leaks in the gaming history. So I think their servers were on Slack, which is a CRM database, and I think they pretty much, the hackers stole, I think that's an 18-year-old kid that pretty much stole over 60 source code lines or whatnot, or pretty much code, and leaked some of the videos and what they're planning on doing. So hacker leaks dozens of Grand Theft Auto 6 gameplay videos. I was kind of looking at some of the YouTube videos as well. It kind of looks, I mean, the reviews in terms of the YouTube comments were really, really good. I mean, in terms of what the game looked like, it was very, very good. And we already know that this is, one of the most popular, if not the most, one of the best-selling games in the world, most popular game in the world. So if and when that comes out, again, the expectations are for 2024, 2025. It's going to be a while until this comes out, but this will be a big boost for Take-Two Interactive, right? Because that's the company that pretty much releases GTA, and that's the franchise that they've been running for years now. So so that I think can potentially add, as a both a negative and a positive catalyst. Negative that this will potentially delay the timelines. This is not great news for the company itself, and pretty much releasing some of these source codes and leaks and whatnot definitely doesn't bode well for the company and kind of pushes out that timeline. But the good news is that everybody who did review the game loved it. Like, the reviews are fantastic and people are just getting that much excited about when the game's going to come out. So Jason, who's a journalist, basically said that not that there was much doubt, but I've confirmed with Rockstar sources that this weekend's massive Grand Theft Auto 6 leak is indeed real, and the footage is early and unfinished, of course, and this is one of the biggest leaks in video game history and a nightmare for Rockstar Games. There was another meme that was posted by another user, which was pretty much the wanted level of the guy who leaked GTA 6. That's pretty much all the stars possibly you can fit in a photo, but that was pretty funny as well. But Adobe here, Wells Fargo downgraded the software company's stock to equal weight from overweight, saying Adobe's planned acquisition of online design firm Figma is a good product fit. So, just as I mentioned that this is a good strategic fit, but that $20 billion price tag leaves little room for error. So I think that everything was done well except for the price itself. I think Adobe came off as being very desperate and aggressive in getting this deal done. And somebody says theft is Grand Theft Auto. Yes, that's good. That's good analogy there. But Adobe here, again, the price tag was the big thing, right? $20 billion is a lot. They're paying over 50 times sales for a company that generated over $400-500 million, or at least that's what the run rate is for 2022. So it's a good strategic fit, but definitely overpaying for the company. So UBS reiterates Nike as a buy. We got Oppenheimer reiterating Peloton as outperform. We've got Bank of America reiterating Amazon as a buy. Deutsche Bank reiterating Micron as a buy as well. Raymond James adds Salesforce to the analyst favorites list. We got Compass Point initiating Zillow as a buy, and JP Morgan reiterating Apple as overweight. And then finally, Oppenheimer upgrades Netflix to outperform from neutral perform as well. So shout out to Oscar for posting some very, very good charts in our Discord. I took the liberty of actually sharing some of them with you guys. So these are some of the growth forecasts for 2023 that are sliding, obviously, for the UK, the Europe area, and the US as well. We've talked about the Atlanta Fed GDP estimates and how they've been coming down. First quarter, second quarter were both declines, and third quarter is already pegged for 0.5% increase. I don't think it's going to be long until we actually start talking a little bit more about potentially entering a recession. And of course, there's going to be a pretty high levels of risk when it comes to recession in the US, considering that interest rates are going higher and higher. The UK is obviously in a much worse situation. Bank of England has already talked about that they are going to enter a recession in Q4 of 22, and then they're going to stay there until the end of 2023. So this is already a much worsening picture in the euro area. The ECB is also consistently raising rates to fight inflation. Inflation in the Europe area is also much, much higher. So obviously they're also, getting lower forecasts for when it comes to growth. This right here is the credit card debt. So this was actually very, very eye-opening that over 60% of credit card debtors carry a debt for a year or more, and over 28% at least 3 years, and 40% are at least 2 years. So I mean, these are just insane numbers. So credit card debt, obviously, just in debt in general, credit card debt, student loan debt, mortgage debt, all those things combined, I think it's trillions of dollars in the US. So that is the only concern that I have when it comes to the US from a debt standpoint. And this right here, I think, is one of the most important charts that we need to pay attention to. Because this is literally, I think, again, Oscar, shout out to you for sharing this. I've been trying to get I've been trying to find something very similar to this in terms of what that P multiple adjustment would be, depending on where interest rate would be. I was looking more in terms of the federal funds rate, but this actually goes over the US 10-year yield. So what this really shows us is at different 10-year yield levels, what is going to be the appropriate price earnings multiple on both the S&P and the NASDAQ. So right now we're at just over 3.5%. So we're trading, or the appropriate level should be 15, or just a little bit over 16.3. And right now, since the S&P is at 3873, we can come over to our spreadsheet 3873, and we'll know that we are actually at 17.14 price earnings multiple, right? On a forward basis, we're actually at 16.4 because the forward EPS expectations is $236. So we're pretty much in line with where we need to be when it comes to the 10-year yield, right? But if the 10-year yields keep pushing higher, like for example, if they go up to, let's say, 5%, then the P multiples would come down to under 15, right? Then we're looking at possibly 14 levels in terms of earnings multiple. And 14 would, definitely bring us all the way down here in the 3,400 to 3,300 range. And that's going to be about an 11 to 15% drawdown on the S&P 500, even moving forward, right? So that is something to pay attention to as interest rates continue to push higher, because that's going to put even more pressure on the equity market. They're pretty much going to start competing against the earnings yield, the dividend yield of the S&P 500. So something to pay attention to. And then finally, we've got inflation expectations that have been coming down. So this is pretty much the inflation expectations over the next 5 to 10 years. And the next 1 year inflation expectations. The black line is going to be the next 1 year inflation expectations, and the orange line is going to be the inflation expectations over the next 5-10 years. And you'll notice that 4.6% is where we are for the next 1 year. From September 2022 to September 2023, inflation is expected to come down to 4.6%. So that would be the level. Actually, so that would be the level for us to come down to. And then, of course, for longer term inflation expectations, we're looking at 2.8% over the next 5 to 10 years. So talking a little bit about the markets again, S&P 500, we've got a big fib level to watch here at 3,800. So that's going to be 38.15 more precisely at 0.382 level. And also we've got the NASDAQ kind of fighting off that 200 simple moving average. That is going to be that level to watch. If we are gapping down close to 1% here, then the implied open on the NASDAQ would be at 11,300, 11,350, around those levels. And we'll monitor and see whether the bulls kind of step in around these levels, or whether we continue to see a little bit more of a pullback on the markets here. So Dewey, yep, thank you so much. I really appreciate that. Glad you learned a lot here. So yes, routine action, do the poll and the like. Yep, if you've been watching us, that's the routine here. So when we talk about the polls, let's take a look. We got 60% expecting the markets to be red today, and just about 30% expecting the markets to be green. So again, we are opening with a gap down, but intraday, there's a lot that can happen. I wouldn't be surprised if we do see a little bit of momentum here to the upside as well intraday, as kind of buyers step in. But of course, we do have the Fed meeting scheduled for later this week. So the big consensus right now is still 75 basis points. But as I mentioned in my other video, we're now starting to get a little bit more restrictive than usual. Once we get past 3%, I think that's when the interest rates are actually going to start to show. And what I mean by that is, so far it's been not really that much of a pressure, right? After 3.5, closer to 4%, we'll actually start to see things kind of break a little bit. So unemployment can, initial claims or jobless claims can start to go up. Interest expenses can start to show up in the company's earnings, because again, they're going to be paying more in interest expenses. Valuations are going to be a little bit under stress. So there's a lot of things that are going to start to play in. So Hassan says, I think 1% is an easy bet for this week. Really, 1%? Yeah, it's going to be interesting, right? I mean, what the Fed ends up doing. So right now, I think the last time we checked the Fed Watch tool, it was still priced in for 75. But what was interesting was that starting 2023, the market is actually pricing in a probability for us to even go up to as much as 4.5 to 4.75%. So actually, it has come down a little bit. So earlier, I think in my other video over the weekend, I talked about how there were expectations for at one point during the weekend, the expectations were all the way up to 5 to 5.25%. So that was like an insane number all the way up there. But right now, as it stands, 75, another 75, and then a 50 for us to end the year at 4.25 to 4.5%. So if that is the case, then of course we're going to see a big revision on the upside from the summary of economic projections from the Fed when they release that on the 21st. But that's the expectation from the market, and then stay steady in February, and then March and May for them to increase another 25 basis points, get us to 4.5%, and then start cutting rates back down. But of course, a lot of it depends on where inflation goes. All right, let's see here. So based on Powell directly saying he's ready for pain, an unusually large hike and inflation came in above expectations, feels like it's spelled out this time. Yeah, I mean, I think it's a possibility. I would definitely not rule that out. 20% probability right now according to the Fed funds futures, but I think what he did mention though was another unusually large rate hike. So because he mentioned another in the context of the fact that they've already done a couple of 75 basis points. So I think he mentioned that another unusually large rate hike could be appropriate for the next Fed meeting. So another 75 could be appropriate if inflation continues to be higher. If they actually go with 1%, man, the market's going to drop like a rock because that's going to be way, way out of expectations. It's going to come off as a little bit of a surprise for the market. But 1% good for market shows Jay Powell serious. Yeah, I think that will definitely show that the Jay Powell is very, very serious, but also to what extent is he going to go? Like what extent, like how far are they willing to go with this, you know? So I think that's going to be the real question. Are they really going to cause some serious damage on the economic front when it comes to recession, unemployment, all that stuff? Or is there some level of insight into, okay, they're going to pause a little bit or they're going to slow down if things really starting to worsen? So we already know that Cathie Wood and Elon Musk and everybody else like on that camp still thinks that the Fed is overdoing it and they should actually start. Well, according to Elon Musk, they should drop by 0.25%, whatever that means, whether it's like actually reducing rates by 25 basis points or just dropping the level of the rate hike down by 25 basis points. All right, so let's see here. Yes, Nvidia's coming out with their GTC day, so yes, that's going to be important for Nvidia to watch. Netflix is also doing great because they got an upgrade this morning, so it's up over 2.8, almost 3%, getting up to $250. So very, very nice move back higher. And yeah, it's a surprisingly higher on a day like today when the entire market's kind of gapping down. But it should be interesting how we trade intraday because the QQQs do have a resistance now at 288 because we're back below that level, and the support level intraday, the one to watch at 285, 286. That's going to be the level to pay attention to. And then of course for the SPY, we've got an intraday level at this is QQQ again. So SPY, we've got a level all the way down to 380. So that right there is going to be that level to watch. And of course we got a big gap to also fill in over here all the way up to $390 on the resistance. So late October puts, Chad is asking. So are you asking about buying or selling puts? All right, let's take a look here. So again, if you have any questions on any different stocks or companies you want me to analyze ahead of the week, I'm happy to do that from a more technical analysis. So Chad says buy. So September usually has been, very, very volatile month. It has been, month that's been regarded as very brutal and the markets do sell off. But Q4 has been a little bit better, right? October, November, December, seasonality wise, it's been a lot better for the markets. But then of course we've got other headwinds to deal with, right? There's going to be a potential earnings revision. I'm expecting one once the third quarter earnings actually begin, because I actually doubt that we're going to do $226 in 2022 earnings per share. With 2 more quarters left to go and interest rates about as high as they're going to be, that's absolutely going to be affecting cost of borrowing. It's going to make it more difficult for people to be spending more money as demand continues to get leveled off and pretty much choked by the Fed. So I still think that $226 level is still pretty elevated. The analysts are, I think, a little bit slower to kind of revise that number down. And if we do get an earnings revision on the downside, then yeah, absolutely, I think there's going to be more potential downside on the S&P 500. My worst case targets have been closer to 3,500 all the way down to, I believe, 32. So that right there, those are my 2 worst case targets on the S&P, 3,500 first, all the way down to 3,200. So but that also depends on how severe the recession is going to be and what type of earnings revisions we actually get from the market. So Richard, yes, from a technical standpoint, I do think that Nvidia does make for a good trade opportunity here. Like I said over the weekend video, above 132.50. we're still in the context of this range, right? We're still like pretty much in the same range as where we traded all last week. So if it does break down below 126, that would be a big breakdown below its weekly SMA as well, the 200 SMA. So that would be kind of like a stop limit order where you want to kind of get out, don't want to risk anymore. But this obviously does make for a good sort of risk reward trade opportunity considering how oversold it is and all the confluence of different support levels that I mentioned in that other video. And of course, not to mention a few upside gaps that we need to fill. We've got the volume by price profile. We've got the 200 SMA. We've got an oversold condition. So there's a lot of different things that kind of, make sense at these levels. So only from a technical standpoint, not from a fundamental standpoint, because I want to be very clear that fundamentally speaking, I've got puts on Nvidia down to like $100 strike. So I'm not willing to actually own this for the long term at these prices, but I'd be more than happy to kind of take a quick trade on a more swing basis for Nvidia. So Oscar says 100% time for a new, more bearish worst outcome video. You want me to go even more worst? My worst case scenario, kind of like do that video. Let's see. Nvidia will cover the gap 142 today as it should be covered. Oleg says, Oleg, love the optimism, my man. You're always on point with that bull case scenario. So yes, we do have gaps up to 142, and on a weekly basis, the range for Nvidia has been about 5 to 8%. Like, it's not unusual for us to see Nvidia move plus minus 5 to 8% in any given week. So if you do get up to 142, that's going to be about 8 to 9%. So I don't think that that's going to happen all today. But yes, that would be the expectation either this week or going into next week. So I think 8%, 9% move is possible, but over the course of next several days out, not just today. Yeah, and of course, Fed meeting can really throw us off on all fundamental technical analysis fronts. So of course, depending on what the Federal Reserve says and what Jerome Powell does, is really what's going to be driving the overall markets, right? Every time Jerome Powell says, you can kind of throw out the fundamentals and technicals out the window because it's all about what sentiment we're going to have from the Fed. Let's see here. Yep, Armageddon case for stock report or 7 years or turbulation case. Let's see. Have you bought something on Friday? Are you planning to? But say Google, if it does go below $100, or looking at the Fed macro situation, you'll wait for a lower Google price, like below 90. Great question. So Google, again, about $92 is my fair value on Google. It's coming down to very attractive levels. Would love to, sell a cash secured put under $100 on Google to get the most, premium out of it. But again, looking at some of those 11 different signals and indicators, one of them, actually, the first one was the second one was having that spread between core inflation and the Fed funds rate above 0, right? So that number being positive. And right now the Fed funds rate is 2.25. Even if I expect 75 basis points this week, that's going to put us at 3%, and core inflation is back above 6%. So right now that spread is negative 3.3%. I need that spread to be positive to be a lot more confident that interest rates are actually going to be putting a dent on inflation, and we're going to see core inflation come back down to target. That's number one. That's from more of a macroeconomic standpoint, and of course keeping a close eye on volatility as well. But we'll continue to keep a close eye on companies that are coming down. Google is one of them. Meta is another one. Nvidia, AMD, some of the chip stocks. If they keep sliding lower, then yeah, I'm not going to hesitate in buying if they continue to come down to my fair values. So Arif, is Meta a good to buy now? I did a complete video on Meta as well over the weekend. You can check that out if you haven't already. I do think that the stock price coming down has definitely created a lot of fear, a lot of uncertainty around the company. And when you look at the company's fundamentals and where they're headed, I spent pretty much a lot of time over the weekend looking at the AR/VR, right? Pretty much the metaverse. But again, I know metaverse has gotten a pretty bad rep over the months. It kind of seems like pretty much a buzzword, but I did a lot of research on it, and I am very, very excited about what it has to offer. Like, the use case and the opportunity for just simple virtual reality is just absolutely endless. And we're talking like industries like education, healthcare, manufacturing, design, architecture. Like, these are things that you can actually do without actually having to do them, right? So think about all the things that you can test without actually putting them in motion. You can save so much time, resources, money. And there's a reason why all these companies want to get into the AR, VR, and the metaverse, right? I mean, it's not just a fluke. I mean, Apple's not working on potentially their Apple glasses for no reason. They don't want to waste money. They want to get into it because there's opportunity. So, there's definitely opportunity in this, and they are definitely at the forefront of doing it. I've even heard from many people that have completely replaced their computers and phones, and they're simply using the headset, the Oculus. We've also got a new event coming out on October 11th where Meta is going to announce their Quest Pro. Comes at a much pricier tag, but $1,500. But we'll learn more about technology and whatnot and what their plans are moving forward. So I do think that we need to make that distinction between the stock price and the company, right? If we don't, then if I were to kind of look at Nvidia, I can make the same argument and tell you that Nvidia is a dying company because the stock price looks like this, right? It's been coming down. It's down over 63%. But that's obviously not true because we know that Nvidia is a very strong company with a great moat. It's got lots of growth potential, and it can continue to do well. So I think it's really important, just kind of understanding what is underneath, what is, how's the company doing, and kind of make that distinction between the stock price and the company. So that's where I'm at. So that was a great another video, Caddy on Meta. So thank you, I appreciate that. All right, let's see here. Sandeep says Metaverse is like Iron Man movie with a VR headset. Yeah, I mean, honestly, Sandeep, I even talked to you about it, and it's crazy, man. I started to think about all the use cases. Like, it's just insane how many things that you can do with it. The opportunity is just endless in virtual reality. I even listened to like a TED Talk where there's an amazing amount of detail and so many things that you can actually learn from it. So yeah, and this is a market that's expected to grow by over 40% compounded annually from about 27 billion from where it is right now to over like hundreds of billions of dollars in the future. So yeah, I think there's a lot of use cases. Yeah, Ryan says if Meta breaks below 137, it'll cascade lower. I absolutely agree. I think technicals are absolute, excuse my language, but technicals are absolute shit here. They've just been going down. I mean, they've gone from $390 to like $144. So technicals really, really weak. I'm fully on board with anybody who has to say the technicals are absolutely terrible. Couldn't agree more. So we got a support here down to 137. And we got another one sitting all the way down here in the 120s. So those right there are going to be a couple levels to really watch for Meta. And right now it's just the lack of any type of good news. And again, the markets look for the next couple of quarters. That's really the game here, right? Who can beat the market and who can find the best stock that's going to perform in the next 12 months, not the best stock that's going to perform over the next 12 years, right? Analysts and professional money managers, people who are running professional money, they want to focus on companies that are going to do well in the next few quarters, not the next few years. They don't have time for waiting around for the next few years. So I think that's where retail can actually take advantage of long-term opportunities that might be selling down on just based on few bad quarters. All right, so let's take a look at the markets here. We got about a minute left to open. The NASDAQ here still down, although recovering. We'll see how we trade. And then, of course, S&P over here. And we got the Dow Jones. The yields are now almost at 3.5%. Don't forget, this chart I think is going to be very, very important. The 10-year yields continues to climb higher. It's going to give us a good understanding on what that sensitivity is going to look like based on the yield and the index valuation based on the earnings multiple as well. So right now we're at just under 3.5%. And then, of course, we got the interest rates also expected to go up another 75 basis points later this week, get up to over 3%. All right, so let's see here. David says, yes, I remember the days when FB Meta was considered cheap at $300. Yeah, I think a lot of it was based on the near-term growth potential for the company, right? And a lot of it got, I mean, if you go back about 12 months, a lot of things changed, right? From a macroeconomic standpoint, inflation, Russia's invasion of Ukraine, interest rates. So pretty much a lot of companies that were considered cheap at one point, the entire macro picture shifted so much that the near-term growth outlook changed completely. Like if you take a look at ad spend 12 months ago wasn't expected to go down as much as it is right now, right? It's already down so much this year. And as a result, most advertising companies, including the likes of Google and Pinterest and Snapchat and Twitter and Amazon, they've all been selling off in 2022. So the entire macro picture has shifted so much in the last 12 months that most stocks that were considered cheap based on the near-term outlook back then are obviously much, much lower and way below those levels now. So the markets are constantly changing, right? So they're pretty much changing every day. You're getting bombarded with so much news, and you have to reevaluate it. It's just a constant process of just understanding the macros and the fundamentals and the technicals and pretty much staying on top of it. All right, let's see here. All right, so questions about FedEx and UPS as well. So I have several articles saying that there's more FedEx problem. Margin UPS are much better than FedEx. Yeah, so FedEx definitely posting some brutal numbers over last week here. Let me just open up the stock charts as well so we can take a look at some individual companies. Tesla is one that's been performing really well, right? So Tesla is one of them that's been holding up a lot better over the last couple weeks here that we've seen a sell-off. Nvidia here is, let's see, down a little bit over 22 basis points. So this is definitely pushing higher right now. This is the chart that we're paying attention to on the 30-minute time frame. So again, we're seeing a little bit of a potential move to the upside. We'll see if you actually do get a breakout about 132.50 for Nvidia. We might as well. We're almost there. For Nvidia right now, it's in the green, and we've also got AMD pushing higher here, only down about 0.4%, and we got Tesla here also kind of recovering a little bit, and then we got Apple only down 79, close to 80 basis points. So some green candles popping up right off the bat at the open. So again, we'll kind of see how we trade after 15-20 minutes, because that's what really matters, and not just the first 5-10 minutes here. So, and yeah, if there's any problems with the power or the connection, I just want to apologize in advance because there's been like a massive outage all over India with our provider. So I've been literally like all morning. It was so frustrating for me getting, just talking to them over the phone. There was some maintenance going on. So it's working now, fingers crossed. Hopefully it continues to work with no problems, but I do apologize in advance if that happens. All right, so Nvidia high for the day right now, 132.62. We definitely seem to be getting a little bit of buyers kind of stepping in here, and looks like we are pushing through. And Tesla here back over $300. AMD is also on the move. Nvidia getting a big breakout here, so definitely kind of breaking above its previous week's high. So yep, so we definitely starting to see a little bit of a breakout on the upside. So I wouldn't be surprised. Again, this is more on a technical basis, nothing to do with fundamentals, because my fair value would obviously be a lot lower. But on a technical basis, there's a lot of confluence at the 120s, right? Low 120s. There's a lot of buyers in support, along with the 200 SMA and the volume price profile and stuff like that. So something to keep in mind for Nvidia if you are trading that. All right, let's see here. So let's see which stocks are actually moving up here. Netflix definitely on the move, 1.3%. We've got a pretty big pop here in Nvidia pushing higher. Meta's also green. Microsoft has been sliding lower and lower, right? Microsoft is, I think, almost at a new 52-week low here, 241.50. It only needs to drop another 50 cents. It is going to be at a new 52-week low for Microsoft. I think Microsoft's valuation is a little bit of a concern. I think that is one thing that can blindside investors in Microsoft, because remember, these companies, these are phenomenal, great quality companies. But what is the one thing that blindsides investors is, and what I've learned with my experience in Meta, and again, I'm just sharing my mistake as well over here, is if you don't account for the slowing or the decelerating growth, valuation gets revised down, right? And if the P multiple is the price sales multiple, which has been a little bit higher for Microsoft and Apple and companies like those, if those get revised down, anything is possible, right? Anything is possible. You might think on the surface that, oh, Microsoft is the safest stock to own. Think again, right? Think again. Nothing is safe in the markets. Everything carries risk. So it's something to keep in mind, because it's always demanded a much higher price sales multiple because of its very strong growth and very, very wide moat. But if a revision happens, then obviously that's going to require some readjustments on the valuation side. Yes, Oscar, I have been saying for months, watch for P and earnings revisions are coming. But yeah, sometimes I also, give in on the FOMO or the hype or something. I'm only human, right? So, but yes, that I think is true. That's still going to be a big risk for the markets to watch out for if earnings do get revised down. I mean, it's all math, right? Again, we're not making anything up here. It's all math, and based on math, we're still at 17 times earnings on a 2026 earnings per share. On a forward basis, we're at 16.4. So you can do the math here. If that gets revised down, it'll be a much higher PE. That leaves more room for downside. So something to keep in mind. So what are your thoughts on Microsoft? So I'm actually a buyer in the low 200s. That's kind of like what my fair value is on Microsoft. Not really touching here at these levels, but I would love to pick it up at those levels. All right, so let's see how the markets are doing overall and what's actually moving here in the day. So, okay, so we got Coinbase down 4.6. So that pretty much makes sense because Bitcoin and Ethereum and cryptos have been selling off over the weekend. We got biotech also down. So LABU down to now under $8. Man, Steve's not going to love that. I'm going to check in on him later after this live stream. But Moderna is down over 3.6%. We got Vertex coming down to 282. Vertex is another one. If this one continues to sell off to lower valuations, I mean, if it continues to pull back, we've already seen two really. Actually, no, this is the 15-minute chart here. So it has been selling off as well. I mean, it's mostly been consolidating more or less in a very, very tight sort of symmetrical triangle, if you were to call it right here. It's just been consolidating sideways, but if it continues to sell off, I mean, it comes down to low 250s and 220s, then I think Vertex is another one to look at. Definitely a great company. Take-Two Interactive is getting bought up here very nicely after the leaks. And again, I think this is only a good thing for Take-Two, not from like a leaking standpoint, but just like getting that initial customer feedback, right? I mean, they'll know at least whether they're on the right track to build this thing or not, because it's such a big title. I mean, GTA Grand Theft Auto has been one of the best-selling games like in the world. So, I mean, I've been a huge fan of that game. I've been playing it for years. So, I think it only helps get them that initial feedback. What are people thinking about? Whatever was released, whatever videos. And I think most of the comments I've read, most of the reviews, Sandeep, I was actually thinking about that too. If the leak was actually intentional, I thought about it for a second. If they wanted to get some feedback from the people that are going to be playing that game and whether they're on the right track or not, I was thinking about that. But again, obviously we don't have any reports or anything that suggests that. But all the comments I've read, all the reviews I've read have been just incredible for the overall sort of GTA 6. Can you make a video on Moderna? Moderna. Good earnings and a lot of cash on the balance sheet. Yes, so Srinivas, I'll do a video on Moderna as well. Maybe do like an update on them. I'll add them to this list of stocks that I need to analyze. So mRNA. We already did analyze this one, Southern Corp. There's a few more companies that I need to get to eventually. Qualcomm, I've done it. And then just some more NXPI, we did it. So yeah, just a few more I'll get to later this week. So going back to our watch list here, again, we do have Coinbase, LABU, we got Vertex, Take-Two Interactive coming down, Zim is coming down under $29 now. So this is a very strong support at $28 for Zim. This would be the level to watch. But again, keep a close eye on the shipping rates, the Baltic Index, and how that's doing, right? It got up to over 10,000. That's where it peaked. Right now it's under $6,000, $5,000. So that's obviously driving this stock lower. InMode is another one that's coming down to very low levels again. So it's down over 2.2% today, $30. My fair value was at $20. We kind of pretty much picked it up in the low 20s, rode it all the way up to almost $38, $39. And right now it's coming back down. So again, we can kind of rinse and repeat as long as the growth stays intact for this company. It's been very, very strong in terms of its revenue and earnings growth. The guidance has been good. So if it comes down to low 20s again, this is something to put on your watch list for future trade opportunities. Tattooed Chef is now breaking it down. So there was a little bit of a descending triangle on Tattooed Chef. So this right here was a lower highs that it was forming. We kind of identified that last week during our live stream. $6 was a very critical area of support. for Tattooed Chef. I'm actually interested in learning where the most volume is on this stock, since it's mostly, I think it's a retail stock for the most part. Let's see. All right, so majority of the volume traded is at $17, $17 to $18. Most of the volume you can see was traded between $15 and $18 per share. That's been the most volume. But if we come in closer to this time and where the volume is since January of this year, so since the beginning of this year, majority of the volume has now been traded around 650. So 650 is going to be that level, but we're now starting to kind of break down. And that acted as a little bit of resistance, last week as well. We kind of got rejected a couple of times before getting that breakdown on Friday. All right, so going over to some more companies here. So let's see what's actually really, really red or green. So we got AMC pushing up 3.5%. NEO's on the move, back over $20. So that is a good move on NEO once again. But again, you can see how well we're getting rejected at this level, right? Inside this red rectangle, we're just not able to break out over this resistance here for NEO. So it's just like $22 to $24 range. Very, very strong resistance for NEO at those levels. We got Cloudflare pushing up 3%. Alta, Southwest, Roku pushing higher. DocuSign, APPS. I heard somebody mention APPS. APPS target price for buying almost 52-week lows. Let's take a look. So this one also has come down to really low valuations. I would keep a close eye on 1460s, Alex. This is a level from back in June, I believe, where it rallied, I think over 50%. Actually, rally was 70% from June through August. We're coming back down to that level. So it's not quite there at 52-week lows. I mean, it would still need to drop another, 12% before it comes down to 52-week lows. But 1460s would be the level that I would be watching as a very strong support. All right, so how are the markets doing here? We are seeing a little bit of a lift higher on the NASDAQ. So we are definitely seeing a potential move up. So we're only down 30 basis points. The S&P is only down 40 basis points. And the Dow is only down about 125 points. So a little bit of momentum kind of stepping in ahead of the Fed meeting. And of course, a speech from Jerome Powell. Nvidia is up 70 basis points, so getting up to 133 now. Tesla's up $304 here, 33 basis points. AMD's green. Apple also trying to get green here very quickly. But we are seeing some momentum here in a lot of individual stocks intraday. Yeah, so Kevin, let's take a look at LIT. LIT is a great drink, man. I really like it. No, I'm just kidding. So LIT, let's take a look. Global Lithium. So okay, looks like the volume's really low. Again, when I look at individual stocks, I can almost tell like from the pattern that the volume is going to be really low. That means spreads are going to be wider for this company, right? It only trades about 500,000 shares per day. So if you take a look at the 5-minute chart, you're going to get a lot of choppiness for this, right? There's almost no liquidity. Very little liquidity. I mean, sure, you can find good entries and exits, and I'm sure there's not going to be any issues. 500,000 shares is still pretty good, but again, it's a little bit illiquid with what we look at, right? Close to 1 million shares on average is what I like to look at. So it doesn't have a market cap. Interesting here. So okay, it's investment trust mutual fund, down 14%, very, very low yield. Doesn't have any more fundamentals here. So okay. All right, so it's an ETF, but still low volume. Definitely would pay attention to the holdings as well for the company, right? What are the holdings? What do they actually own within this ETF? So I can definitely take a look at that and share more thoughts. But just from this analysis, again, we don't have much to look at other than the fact that the volume is a little bit lower. I'm sure you can find other ETFs as well that are very similar to this one, lithium or battery tech ETF, that might be able to provide you with more liquidity, more volume, more sort of better patterns. But I'll take a look at the holdings and what this ETF actually owns to kind of give you my insight into this. Crowdstrike, let's take a look. So Crowdstrike here is flat on the day, slightly up over 50 basis points, so 172. So watching really low levels on Crowdstrike, right? It's nowhere near close to where I want it to be. So would be interested low 100s, 120s would be levels for Crowdstrike that I'd be paying attention to. Cybersecurity in general has very high price sales multiple. This is one sector that's really not come down. I think we analyze Okta. Okta is a company that I think has got great potential. I mean, this company's got insane amount of potential with a big TAM, growing market, growing revenues, growing customers, everything. It's just that they're burning through a lot of cash. They're just like left and right, they're spending money. They're just like dishing money out like there's no tomorrow. So if they can control their expenses, I think this company has a lot of potential to be very successful and kind of get that operating leverage to kick in as well. So, 58, 59, all the way down to $47 is something to pay attention to. We've got a gap to fill on the upside here, sitting roughly around $69 to $89. So this is another one. Again, I'm watching Fortinet as well. Fortinet's a little bit more established, more profitable, but on a consistent downtrend as well, but needed to be at much lower levels in terms of valuations. All right, so market's pretty much gone up to fill almost all of this gap. We need to get up to 11,447. Enphase, let's see. Enphase probably hitting a new all-time high, is it? Probably is. Every time I look at Enphase, it's either at an all-time high or almost very close to an all-time high. That's been the story of Enphase. And I know, Kevin, you've done really well on Enphase as well. But, we've talked about the negative divergence aspect of it. We continue to make these higher highs and, of course, continue to push higher. Year to date, the stock's up over 70%, which is absolutely insane. And solar is obviously doing a lot better, profitable company. The only thing is the valuation, very, very extended, 217 times earnings, 25 times sales. Like, that's a very, very expensive price sales multiple. So, yeah, great company, great stock from a technical standpoint, but valuations just don't check off. Seems to be really, really overpriced in my opinion. So, if it comes down to lower levels, then absolutely, I'm all for it. Yeah, Justice says Enphase is way overpriced. I agree. I think it's P is 220, price sales at 25. So that's why you'll notice that there's not a lot of volume. I mean, there's not a lot of buyers stepping in. I mean, buying pressure has pretty much been exhausted on Enphase. It's just a question of whether we see some profit taking or not. If there's going to be profit taking, well, then you can expect prices to come down for Enphase. All right, so we're seeing our first red candle in the 5-minute here. So what platforms do you recommend to buy stock and sell? So Tall really depends on where you are from, right? Where you are based out of. So in our Discord, you can actually go there and there's going to be a complete broker list. You can check that out for yourself. We've got I think over 30 to 40 different countries, and we're consistently adding more. Every country will have a set of brokers that are used by our members. So everybody who's in our Discord and that belongs to that country have shared what broker they use and how happy they've been, and we've pretty much created a whole list for all the brokers that our members use from different parts of the world. So you can check that out for yourself. Should be really helpful if anybody's looking for different brokers to use. So yeah, that's available in our Discord. Come on, did you buy Nvidia? Not yet. I'm live streaming. I'll probably do something after the live stream, so I'll update everybody on our Discord. Definitely starting to see a nice breakout, and that's really good. Although we are seeing some momentum back down, so we're seeing again Nvidia kind of see a little bit of a breakdown, pretty much a rejection of 132.50, right? So this is the 15-minute candle. We did see a little bit of a breakout, but we're not getting that follow through. What I'd like to see ideally is a pattern that pretty much breaks out, comes back down to retest, and then continues to push higher, right? That is a good sign of a breakout, retest, and then a continuation, right? That would be a nice breakout. But what we're seeing right now is simply a rejection area, like a rejection level here. So still waiting for a more confirmed break to the upside above 132 if Nvidia can take out its previous high. All right, so Apple's still down. AMD and Nvidia and Tesla are kind of rolling over a little bit, but still green on the day so far. And LABU, yes, XBI should be on a slide here, 2.5%, and LABU here is dropping like crazy. So down over 7.5%. I'm actually going to be closing out my covered calls on LABU today, finally, after a very long time. So this will be closed. So right now, those covered calls are up. Actually, no. I forgot. God, I forgot completely. I closed out of my position last week. Yes. I forgot about that. Yeah, so I'm actually out. Most of it, I'm out on LABU. I've only got a few hundred shares left with a few covered calls protecting on the downside. So that's all I have left on LABU. Did exit a lot of it last week. All right, we're seeing another push higher for the markets, and Nvidia kind of going there up there for round 2. See if you actually do get a breakout of a 132.50 here. Tesla's running. Yep, so Tesla is definitely on the move here. 40 basis points back up to $304, $305. Apple's also running, getting a nice momentum to the upside. 20 basis points right now. Google just hovering around $100. Amazon's hovering around 123. PayPal is up close to 1%. PayPal's done really well too, right? PayPal, very similar to Tesla, has done really well. It's kind of held up a lot better compared to some of the other stocks and other names. So, yeah, Meta holding green, but barely. Yeah, I mean, the technicals look really bad. I mean, 137 is going to be that next support for Meta, which is about $10 lower from where we are right now. That's pretty much going to be its pandemic low. So 137, I'm fully kind of prepared mentally to see that level on Meta if it comes down to 137. ASO earnings. Let's take a look on AZO here. Pandemic low was low 140s. Yeah, I mean 137, right? 137, 140s was the pandemic low for Meta. Yeah, right here. This is the low 137. So it was sub 140. This is on March 18th, 2020, right? 137. All right, let's take a look at AZO here. Swapnil, my buy target on Microsoft is actually in the low 200s. Again, you can actually check out the spreadsheet, right? The fair value spreadsheet. You can go there. You can all my analysis is going to be updated over there, and that's going to be updated every year. And there's going to be more stocks added as well, so you can check that out. All right, AutoZone. Yes, I did read up a little bit on that on them earlier. They actually beat both on revenue and EPS, so it looks like they had very strong numbers come in. Let's see if we can actually find the guidance as well from the company. Let's see here. Okay. So they released. No, it's from September 16th. All right, over here, maybe you can find it. All right, so they reported about earnings, fourth quarter earnings Monday of $40.51, up from $35.72. How many shares does this company have? Does this company even have any shares outstanding? What? 21 million shares? Like, that is so low. Like, that's what I was expecting because the earnings per share number is so high. They only have 20. Kevin says 6. They only have 21 million shares outstanding. And that, to make things even better, they've bought back shares in the last 6 years as if they didn't already have very few shares in the market. So they've bought back from 30 million down to 21 million. That's crazy. So pretty insane earnings per share of over $40 from the company, and we got analysts expecting $38.47. The stock price trading at obviously of almost $2,200 because of the lower share count. 9.4 million currently because, again, looking at the recent quarter. But let's take a look at. But again, Kevin, one more thing I want to point out is the volume, man. Like this stock is just not even looked at, or it's not even traded as much. You know, even though it's got a very, very strong pattern from its pandemic lows, this thing is up over 236%. It's kind of held up really well. Year to date, it's actually up 5.8%. But again, only 148,000 shares traded. If you come over to the 5-minute chart, this is going to be so distorted. Like, you won't even find any liquidity. The spreads are going to be so wide. So wide. We got like a $9 spread on the bid and the ask. It's just, yeah, there's little to no liquidity. Again, very, very illiquid stock. So, but I like it. I think the revenue and earnings have been very strong in terms of their overall growth here in the financials. And if you take a look at the earnings estimates, wow, we're actually expected to grow earnings pretty well. 115 to 125 to 137 to $150. And revenue also expected to still grow, but moderately grow. So, that is something that I think is really good too. And then looking at the valuation, well, 19 times earnings, 3 times sales. Man, I'm actually going to analyze this stock now. Even though it's a low volume stock, that's the only sort of issue. But I'll definitely analyze this. AZO. So, do a video on this. Buyback is nice. AutoZone to the moon. 15,000 Max says until the end, till the year's end. Srinivas says AutoZone is selling products at higher prices. Air filters cost me $20 versus $6 in AWS or Amazon. You mean? Yeah, that's crazy. I mean, I'm sure they're also dealing with a lot of supply chain issues, and just inflationary pressures are driving cost higher, and they're pretty much charging people a lot of money in terms of those prices. So I think that's one of the reasons why prices are so high. But all right, TBC. Oleg says, looks like marked is on green reverse direction. So we're going to end this poll. I'm sure we've got a lot of votes here, 524. So thank you so much for participating. And then now we're going to do another poll here. Fed's rate hike this week. I'm going to put 50 basis points, 75, 100. And then for the people, for the crazy ones out there, 125. All right, let me know. Let us know what your expectations are. And in the meantime, we'll take a look at TBC, what that stock is. Okay, so AT&T, this looks like a senior note that's due in 2067. So long time. Decent yield, again, very, very illiquid, very low volume. So, this is not really what I personally like to trade. Pretty much can't even trade because the volumes is so low. But if you want, I can do some more analysis on this, Dan, and kind of share my thesis in the future. All right, RNG. I think this is another stock that is on the list of stocks we need to analyze, Ring Central. But again, very strong revenue growth. We've got a pretty big operating expense for the company, which is one of the reasons why even though revenues are growing, profits are not growing at all because of their big operating expense, right? You can see that right here. If I remove everything here, you'll notice the operating expenses have been just increasing, right? They've gone up to over $1.4 billion. You compare that to the revenue. Revenue is $1.5 billion. 1.6 billion and operating expense 1.45 billion. So right off the bat, we know the company's spending so much money on growth. They're spending on salaries, wages, marketing expense, advertising, all those things pretty much eating into their profitability. So all right, let's take a look at the markets here. Still, pushing higher intraday, so that's good, but mostly flat. Now, since we have filled majority of that gap back higher. So SPY has also been pushing higher, and QQQ is also back above $288. And then of course some of the, this right here is going to be Nvidia, back above 132.50s. So getting a nice push higher. We want to continue to see a continuation in that, and then potentially come down to get a retest and then move higher even further. This was the first 15-minute candle that actually closed above 132.50. We just closed that candle now. Apple, look at that. Apple just turned green. Very, very strong momentum from Apple here. So I think the market's just in a very, very sideways consolidated pattern today, just mostly flat in anticipation of what will be a very, very important and interesting Fed meeting. So 70% expecting 75 basis points. We got 22% expecting a full 100. That's very much in line with what we have here. Almost identical. And that's literally what the market tells us also, right? Even our polls are in line with the Fed funds futures, and that's what the market is expecting. So 80% 75, 20% 100. We've got 70% because we have other options as well. So 70% 75, and then 24% 100, and then it's a few people expecting 125 and 50. So Shashank, that's a great question. Will the markets go green with 75 basis points? The real question, have you oversold on 100 basis points? I think the bigger question really would be what the guidance will be from the Fed, right? What is going to be that guidance or that SEP moving forward? Because look, if we get the 75 basis points, the market already expects that. The Fed funds futures already expect that. Majority of us here in this community expect that because the polls did show that 70% 75. I think that's going to be a non sort of directional move, non sort of surprising move. But what's going to be important is the guidance, right? What is the Fed going to do moving forward in October, in December, and moving forward from their SEP? That's going to be important. Now, if the Fed comes with 100 basis points, well, that's going to be a little bit surprising, right? That's going to put that's going to create some sentiment on the downside, because not only from a valuation standpoint, from an interest rate standpoint, well, that's actually going to start affecting the overall economy as well from a recession standpoint, and that will lower earnings estimates moving forward. So I think 100, in my opinion, would cause some problems and could lead to a potential sell-off. And then if you do get a 75, then I think it's pretty much the base case, but then the guidance is going to be what's going to be moving the market. Guidance and a speech. That's what's going to move the market. So right now, as it stands, I think the market's pricing in 75 and then another 75 and then a 25 or 50 to close the year at around 4.5%. And then next year also to raise another 25 to get us to 4.5, 4.75, close to 5%, and then cut back down on rates. All right, so that's going to be it, everybody. Again, thank you so much for joining in. I really, really appreciate it. The NASDAQ here kind of filled that entire gap. So we did kind of push higher to fill that entire gap, and now we're starting to kind of roll over a little bit. It's still down 35 basis points. The S&P is down 42, and the Dow is also pulling back 108 points, and some individual stocks also pushing higher. Nvidia is still holding up above 132.50. That's going to be the level that I'm going to be paying attention to. And Tesla also doing well. Apple's doing well. AMD, like the intraday momentum is there. But I think it's mostly going to be consolidating just kind of in anticipation of what the Fed is going to do on Wednesday, the 21st. So thank you so much. I really appreciate it. As always, make sure that you drop a like because we are very low on likes today. So 134 only. So make sure that you tap that like button so we can get this number to at least over 250. And also subscribe to the channel if you're just joining us for the first time. And link to our Discord and Patreon is going to be down in the description below if you want to join and, of course, be a part of our money investing community. So thank you so much. As always, happy investing, and I'll see you guys in the next video.